Welcome to the Tradier Rundown. I am Jim Urio. That's Bob Iacchino. Together, we are the hosts of Tradier's The Trader's Edge, which airs at 3 p.m. Chicago time, live every Wednesday, and then it's on YouTube afterwards. Bobby, how are you?
Good. How you doing, Jimmy?
Good. Today for the rundown, we're talking about gold, which I think is fascinating. Gold has been the stalwart. Gold has been something that has kept its bid even when the dollar's rallied, even when yields have gone up. They've broke from yields. So there's a couple things I want to break down. Bitcoin has taken it on the chin. Bitcoin has lost, whatever, how much from its top, from 80 down to 60. It's a $3 trillion market cap in the crypto space. It's what is it in gold now? $15 trillion market cap for gold?
Somewhere in that range.
If Bitcoin is getting pummeled, is that helping the bid in gold, or they trade in tandem as both a no confidence vote in the stewardship of fiat currencies?
So interesting. They obviously have a positive correlation like you would expect. But over the last 90 days, their correlation has dropped from about 81% to about 60%. So I think you can just deduce that in the short term, that's positive for gold. If you look at even a little bit of the pressure that we've seen with gold, we've obviously seen a lot more pressure in Bitcoin. And it's weird because it has a little bit to do with the halving, but the halving should be a bullish event. I think it's probably still long-term going to be a bullish event. But excuse me, I'm drinking a little soda here. If you look at it, gold has rallied basically now. What is it? 1, 2, 3, 4, 5, 6, 7 of the last 9 weeks. Wow. And even today, we're still up 60 basis points halfway through the week. So it's difficult to say that even if gold pulled back, that it would be that shocking or that negative of a development with that kind of a run.
Yeah. But the funny thing too, is that you mentioned the gold rally. You said 7 out of 9 weeks. At the same time, the dollar's been in a relentless rally. Yields have been in a relentless rally, meaning price is lower. This is highly, highly unusual. When you look out at central banks supposedly buying gold. I know you don't subscribe to the de-dollarization thing. You side more with Brent than with Luke, which, by the way, we love both of their inputs. But we side more with Brent too. So central banks have been stockpiling gold more in the last 2 years than they ever have before. Is this a precursor to a certain level of de-dollarization or no?
It is. So, I wouldn't want to say that I don't believe in de-dollarization because I don't believe it can be done on a scale that the rest of us would say, wow, this must be de-dollarization. Definitely central banks are buying gold, and definitely they don't use that gold, like they don't lend it out for yield and they don't sell options against it to try and monetize some of their gold like you or I might, like we have multiple times when we own gold. But I will say your point of the dollar as well. The dollar normally has an inverse correlation to gold, which it does not have right now. So if you're de-dollarizing, you suspect that the dollar would get quite a bit weaker. And, referencing that same weekly thing I just talked about with gold, you're looking at 4 of the last 6 weeks, the dollar in the aggregate. So that means the dollar index, right, has been stronger. And right now we're only down less than 0.1% on this week.
Right.
So I don't think it's showing up in the charts, but it could be happening.
So I think that it's important to remember that, and a theme that we always do on our show is that the dollar index is absolute bullshit. The dollar index only measures the strength of the dollar if you're in the market to buy some yen or some euros. My guess is most of you people are not in the market to buy some yen or euros. As far as the point goes about de-dollarization, and then I'm going to ask you about the best way for people to increase exposure in gold. But the thing about de-dollarization is that I don't believe that the world is going to de-dollarize. I side more with Brent's opinion of that. But what I do believe is if enough people think that it's a possibility, they will rush into these trades and these trades will be good. So far, that has been a winning strategy. Do you think that's reasonable and that'll keep up? And then how can people increase their exposure in gold?
Well, before we go to that, I want to ask you about silver because you and I talked about silver a couple of times.
Yeah.
And for me, all of my biggest losing trades have been in silver except one. Right. That was in crude oil, but that's just because crude oil is a mover. I don't understand when to trade silver fundamentally. You traded a lot. You've made money in it. Do you trade it just pure technically, or do you have any sort of fundamental stuff behind it?
Here's the problem with the fundamental story behind silver. It jumps camp from being precious and being an industrial. So right now, here's what something that happens quite often in silver. Gold begins to rally because people flock to a precious for whatever reason it is. In this particular case, it's in my opinion, a no confidence vote in our fiscal policies. Silver's still industrial, still with copper, still with platinum. Then all of a sudden, gold gets to a level where it's like, shit, we can't buy gold anymore. What should we buy? What should we buy? Should we buy? And of course, the vector lands on silver, and then silver plays this catch up very hard. I think that's what it's the process of doing right now. As soon as it traded over 26, as you know, I increased my exposure in silver, which is already one of my bigger positions, and it's working out pretty well so far. So silver, to me, it just, I like to play the jump from, oh, it's an industrial to, oh, it's flipping into a precious and we need to buy it. Does that make sense?
It does. So to your question about what people should trade, I'm always a fan of trading the actual thing. But if you don't have a futures account, the leading gold ETFs, you're talking about GLD, IAU, and BAR. If you're going to buy ETFs, you want to make sure that they actually hold physical, and those three do. There's also an ETF called GLTR that I would recommend if you were looking at an ETF because it holds physical gold, silver, palladium, and platinum bullion. So palladium, by the way, if you don't know, is in a constant physical deficit. There's never enough palladium for the demand, even when the demand drops. Platinum obviously has been on a tear. And then the top silver ETF by itself, SLV. I don't personally look at miners much. And I'll give you a quick reason why. I know we're running long here, but like, for example, Barrick Gold right now has some problems with some of their mines because of sanctions we've imposed on countries that Barrick Gold has mines in. Right. So now some of those countries, I don't need to name them, are saying you can't mine here. So while the price may go higher from that, Barrick Gold won't.
Right. And so that could be one of the reasons maybe the miners are not doing as well. Yeah. Everyone always talks about how the miners will do better because they're a leveraged play. Well, they didn't do better in this instance, which I think is very interesting. But anyway, this conversation could go on all day. Please join us on our show. This has been Tradier's Rundown. Our show is Tradier's, the Trader's Edge. Me and Bobby, and usually great guests every Wednesday, 3 p.m. live, Chicago time, because that's the center of the known universe.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc. All rights reserved. Member FINRA SIPC.